Boom, Bitcoin Bulletin is live, and we're diving headfirst into the biggest crypto news shaping your portfolio. Get ready for a lightning round that'll blow your mind. First up, DL Holdings is making major moves in Hong Kong, partnering with a titan of Bitcoin mining to launch what they're calling the first Bitcoin Hashrate stock. This could redefine how we invest in the digital gold rush. Then, we're getting real about the post-halving grind for Bitcoin miners. Are they surviving, adapting, or struggling to keep the lights on with rising costs? We've got the inside scoop on how they're pivoting to renewables and pooling resources to stay afloat. But wait, there's more. Bitcoin's yearly gains are absolutely exploding, clocking in at a staggering 99% and leaving altcoins in the dust. Is this the start of a new Bitcoin dominance era, or just a temporary surge? And finally, we're breaking down the critical $117,500 level that analysts like Mikhail van de Poppe are watching like a hawk. Can Bitcoin smash through this resistance and set new all-time highs? You do not want to miss this. Hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. DL Holdings launches Bitcoin Hashrate stock. Get ready for a seismic shift in how we invest in digital assets. DL Holdings is partnering with a leading Bitcoin miner, formerly associated with Antalpha Capital's CIO, to create Hong Kong's first Bitcoin Hashrate stock. This isn't just another crypto announcement. It's a strategic move to integrate Bitcoin mining directly into a publicly traded entity, potentially offering a new avenue for institutional and retail investors to gain exposure to the hashrate economy. The partnership is substantial, with DL Holdings acquiring 2,200 S21XB HYD Bitcoin miners, boasting a massive hash rate of over 1,040,600 TH. The acquisition is financed through zero-coupon convertible bonds and warrants, a sophisticated financial structure designed to align long-term interests and optimize capital allocation. This deal not only gives DL Holdings access to cutting-edge mining hardware, but also leverages the partner's deep industry expertise and operational capabilities, ensuring competitive deployment and stable, efficient mining operations. DL Holdings plans to use this move to build a significant Bitcoin reserve, aiming to become the largest Bitcoin mining company among Hong Kong-listed peers within 2 years, with a target of over 4,000 BTC in reserve. This initiative is part of a broader three-phase plan by DL Holdings to establish a comprehensive digital finance ecosystem, including strategic acquisitions, RWA tokenization, and a virtual asset trading network. William Lee, partner at DL Holdings, emphasized that Bitcoin mining is now a mature, stable, real economy industry with a clear and sustainable profit model, highlighting Bitcoin's recognized anti-inflation and value preservation attributes. This bold move is already buzzing in the crypto community, with many seeing it as a significant step towards mainstream adoption and a new model for digital asset investment. Analysts are watching closely to see how this innovative financial structure will perform, and if it will set a precedent for other companies looking to enter the Bitcoin mining space. Don't go anywhere, because the Bitcoin mining world is facing some serious challenges after the halving. Next, we're diving deep into how miners are adapting to razor-thin margins and soaring energy costs. Miners brace for impact post-halving. The Bitcoin halving has hit miners hard, creating a challenging new reality where operational costs are soaring while block rewards have been slashed. With the cost to mine a single Bitcoin potentially exceeding $70,000 due to rising electricity prices, many, especially smaller operations, are facing negative margins and fighting for survival. In response to these pressures, miners are aggressively shifting towards renewable energy sources. Over 50% of Bitcoin mining operations now utilize hydropower, wind, or solar energy, with new facilities being built in regions rich in these clean power sources. This not only addresses the escalating energy costs, but also meets the growing demand for sustainable crypto practices, aiming to reduce Bitcoin's carbon footprint. To combat the reduced income and increased difficulty, smaller miners are pooling their resources into mining pools, combining hashing power to stabilize revenue streams. These collaborations extend beyond just Bitcoin mining, incorporating staking and other blockchain services to diversify income. Furthermore, the adoption of newer, more energy-efficient ASIC hardware is seen as a crucial factor in boosting profitability and navigating the volatile market. The crypto community is closely watching this transition, with many anticipating that renewable energy will become the cornerstone of future Bitcoin mining operations. Policymakers are also taking note, with potential incentives for green energy use and carbon taxes on the horizon, making the shift to sustainability not just a strategic choice, but a necessity for long-term viability. But is the network strong? Bitcoin's yearly performance is absolutely crushing it, and we've got the numbers. Next, we'll break down Bitcoin's incredible 99% yearly gains and what it means as altcoins start to flex their muscles. Bitcoin surges 99% annually, outpacing altcoins. Despite recent fluctuations, Bitcoin's yearly performance is nothing short of spectacular, boasting an impressive 99% gain and reasserting its dominance in the cryptocurrency market. While Bitcoin saw a dip in the last 30 days and encountered resistance around the $116,000 mark, its long-term trajectory remains incredibly strong, captivating investors worldwide. This remarkable yearly surge is occurring even as altcoins, including Ethereum, begin to show signs of increased activity and dominance in futures trading volume, making up 85.2% of the total. This shift has analysts like Martin from CryptoQuant observing a heating up of altcoin speculation, with the gap between BTC and altcoin open interest hitting new highs. The market is keenly observing whether this momentum favors Bitcoin's continued ascent or signals a broader altcoin season. Investors are currently navigating market cautiousness ahead of the Federal Reserve's interest rate decision, which is influencing Bitcoin's price movements between $114,395 and $116,833. However, the underlying strength indicated by the 99% annual gain suggests a robust foundation, potentially setting the stage for further price discovery. The community is abuzz with discussions about Bitcoin's resilience and its position against the backdrop of altcoin activity. This period of consolidation and the Federal Reserve's upcoming decision are critical factors that will shape the next phase of the market, with many eyes on whether Bitcoin can maintain its upward momentum or if altcoins will seize the spotlight. But can Bitcoin break through to new highs? We're looking at a critical price level that could unlock the next leg up. Coming up, we reveal the key resistance level analysts are watching and what it means for Bitcoin's all-time high potential. The $117,500 Bitcoin barrier, path to new ATHs. Analysts are zeroing in on a critical price level for Bitcoin, $117,500. Mikhail van de Poppe, founder of MN Capital, highlights this as the crucial resistance that, if surpassed, could propel Bitcoin towards new all-time highs. Currently trading around $115,000, Bitcoin has shown resilience, rallying 9% from its September low, but faces significant psychological and technical hurdles. Van de Poppe points out that substantial liquidity for long positions is concentrated around the $118,000 mark, making this area pivotal for further upward momentum. This analysis comes as the market intently watches the Federal Reserve's upcoming interest rate decision on September 17th, a key event expected to influence market sentiment and potentially trigger volatility. Adding to the bullish outlook, corporate treasuries and spot Bitcoin ETFs continue their accumulation spree, injecting significant capital into the market. Glassnode data revealed that U.S. spot Bitcoin ETFs saw inflows of approximately 5,900 BTC on September 10th, the largest daily intake since mid-July, pushing weekly net flows positive. This sustained institutional demand, coupled with a 30% increase in Bitcoin held by public companies and ETFs since early 2025, creates a favorable backdrop for a price breakout. The crypto community is actively debating the implications of the $117,500 level and the impact of the Federal Reserve meeting. With strong institutional inflows and clear technical targets identified by analysts, The potential for Bitcoin to break its previous all-time highs is a major talking point, underscoring the growing institutional confidence in digital gold. And that's a wrap on today's explosive Bitcoin Bulletin, but we're not done yet. Stick around for our lightning round recap and a full call to action to keep you locked in. And that's a wrap on today's explosive Bitcoin Bulletin. We covered DL Holdings launching Hong Kong's first Bitcoin hashrate stock, the tough but adaptive strategies of Bitcoin miners post-halving, Bitcoin's massive 99% yearly gains surging past altcoins, and the crucial $117,500 resistance level analysts are watching for new all-time highs. Don't miss out on any of these critical updates. Smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto intelligence, ring that notification bell so you're alerted to every new video, and join the conversation in the comments below. Also, make sure to follow us on all our social media channels to stay connected 24/7.